What's good, future millionaires? We back with another banger. I'm DecemberDeMarco, Fortune 500 marketer, here to share my insights to the market with y'all to hopefully help y'all become better informed investors. Salute to y'all for pulling up on the channel. Make sure you hit that thumbs up like button for the YouTube algorithm and do not forget to subscribe. So in this video, I'm going to show you exactly how to find out what's going to, or I could say what's likely to happen next with Shiba Inu. You have to remember, none of this is financial advice. You have to remember to do your own due diligence and never risk more than you're willing to lose. But yes, you will learn the technical analysis tools, what to look for to predict what Shiba Inu is going to likely do next, y'all. So let's take a look at this. We got the overall market in. Shout out to all the new subscribers, everybody for rocking with me, all those that are a part of the DD Nation, those that, are really representing for the channel. I truly appreciate that. Those of you reaching out to me in the comment section, letting me know how much this information means to you. I'm telling you, I truly appreciate that, and it makes me go even harder for y'all. So take a look at this. $2.56 trillion market cap. We hit 2.6 trillion. That will be a high for recent times. We got the fear and greed index at an 89. That means it's cooling off slightly. Overall market up 2.16%. Let's see what this means for overall prices. Bitcoin is 67,187. Bitcoin wants to fly through there, y'all. It wants to fly past that, that all-time high level. So Ethereum, 3,911. BNB, $466. Solana, $145. XRP, 62 cents. We got Cardano at 73 cents. Doge at 16 cents, up 7.5%. Shiba Inu at 4034. We are up 9.84% on the day, y'all. Just heating up for what's likely to come. So let's take a closer look under the hood at Shiba Inu. I want to get straight to it. Get this video a like, y'all. This video should get a minimum of 3,000 likes. And don't just, write that off right now. When you see what I'm about to show y'all in this video, if you appreciate it, hit the like button already if y'all rock with me. But if you truly appreciate it, you weren't going to hit it, smash that like button for me. Also, shout out to those that, get caught up on all the videos, man. Everybody that joined the Vegas Inu token community, we got something very, very exciting going on. The first play to earn Vegas Inu token game utility is about to launch. Don't say I ain't tell you, man. So take a look at the charts right here. What we got with SHIB. We got Shiba Inu on the 4-hour chart. We're going to adjust this so y'all can see it nicely. But I want to show y'all a few things. How to determine where the price is likely going to pull back. How to know, where to buy in at. Now, this is a lot of stuff. This is stuff that's, course level material. But, I love y'all. I'm rocking with y'all because y'all rock with me. So, I'm gonna drop some real fire on y'all. Some real fire. But that don't mean don't come get the course. If you want to learn the rest of the information behind technical analysis, reach out to me via email, DecemberDeMarco@gmail.com. But take a look at this, y'all. So we got the chart. We can see that we are in an obvious uptrend, right? So we want to determine, okay, we see we're in this uptrend. We want to figure out. I'm going to take my screen off for a second, my camera off for a second, so that way y'all can completely see this. Okay, so we got this up. I'm gonna make it just a, you know what? I'm gonna leave it like this. Okay, so first thing we're looking at, we can see, we just had a very serious bullish breakout to the upside. So what we want to know is, because we already know, asset prices don't move up forever. They have to pull back. They have to do what's called a healthy correction or a pullback. That is good for prices because they can continue to staircase their way up to higher price levels without worrying the community or setting it up for a even bigger crash. So take a look at this right here, y'all. The first thing we're going to do is identify our key trend. So we can see, first off, we want to draw a support and resistance area. So we got resistance up here on the chart. Boom. We got support down here on the chart. We're just going to drop it at that lowest level where we see the line start to line up. Or the dotted line starts to line up with the bottom of the lowest part of the chart. As soon as it could, okay, boom, we got it right there. So that's essentially our support and resistance area in this zone. Now let me drag this left a little bit so y'all can see it all the way to where it touches. So around right there is where you see it touching the bottom left corner of the screen. So that's where our support level, you know, around this area you see it touch, as well as here. But I think right here at this area first is, okay, there you go. It's this area. So this area is where you see it touch first. So we're identifying that area as our support level. So now when we see the support and resistance level, we can identify the trend. We want to either, you know, if it's going from the bottom, we want to start from the lowest point and, you know, draw that trend line in the direction that it's trading. So we're going to go from, so just simply identifying the trend. You don't have to mark the chart at a perfect level. You just want to clearly be able to visibly see what direction the trend is headed. So we can see the prices are actually headed up. So we can, you know, now that we know we're in an uptrend, which is obvious, you should be able to identify this. But for those that are new and might not understand this, we are in an uptrend. You want to trade or go with the trend. Now, of course, prices could end up, you know, pulling back to this level here eventually, but we're going to talk about what we can do to determine where the price is likely to pull back. So we know we're in an uptrend now. Now, you know, on this shorter time period, or if we're going from this point, it's a downtrend. But what this forms is converging lines. Converging lines forms a pennant. So when we see that break to the upside like that, that strong momentum to the upside, it usually forms what's called a bull flag. A bull flag is a bullish indicator. It's a continuation pattern that lets technical traders or investors know that, okay, the price has a lot of momentum. It has a lot of, you know, strength behind it. The bulls are very optimistic. That tells them it will pull back to a certain level likely and then continue from that point. That's why this is called a continuation pattern. Now let me show you why it's called a bull flag. So it's bullish is the main, you know, reason why it's called a bull flag. Bullish just means going up. So it's going up. But take a look at this. So now that we got our support and resistance lines, that we understand we're in an uptrend, let's remove that. So we're going to use an indicator called fractal. So Williams fractal. So pull this out. It'll show you all the key, you know, pivot points essentially where, you know, the price is, you know, likely at its lowest or, you know, at its breaking market structure. So either breaking to the downside or breaking to the upside. So now what you can do is take this, go over here to where you can edit these indicators or these indicators over here where it says fractals in the top left corner. You want to hover over it till you see this gear icon. Click that. Change the periods to 10. So that way it's not giving you so many of these breaks in market structure. Now you see we have less of them. Let me adjust it so y'all can see that. Now notice how we have less of them. It's giving us more of those key areas of a break in market structure. So now that we have that there, so now we can kind of determine, okay, where's one of our low points that starts off this breakout movement. Now, one way I learned is to just, you know, determine when it breaks out of this downtrend that we see, when does the run start? So we see resistance at about this point right here. So at about 1109, once it broke past that 1109 level, that's pretty much when all that movement began. So now that we have that, we can measure from this point, from this low point here where it broke out at, and notice it's right around where this red arrow is. So now we can determine that this is where the flagpole starts. So it's called a flag because, you know, a bull flag because it's called a bull because it's going up, and a flag because it actually looks like a flag. This area right here is said to look like a flagpole forming. This area here is supposed to be like the pole of the flag. And then we got an area of consolidation after the initial momentum, which is here in this range where we see the price go, you know, basically like this. So you would measure from the top of the resistance point to the swing low, and then just see where that trend is. So now we follow that trend. Notice how the price was pulling back perfectly to that trend line. This is what technical traders understand as well. They understand to jump in directly once the price starts to tap along that trend line. It's a pretty good chance that it's going to bounce off from there, especially after forming a bullish flag. Now, there's rectangle flags where the price more of, you know, sees a, where the price, a point where the price sees a resistance. So let's say the price was just pretty much trading, and sometimes both patterns you can fit multiple patterns inside one pattern. Keep that in mind also. But let's just say so this is a rectangle pattern, so, or a rectangle flag. So let me take this one off at the bottom so that way it doesn't fit into the one that we have up here, just so y'all get an idea of a rectangle flag. And then the one we're actually forming is called a pennant flag, a bullish pennant. So take a look right here. So this rectangle area I just formed, this would be considered a rectangle flag. Let's say how the price, you know, pulled down here. Let's say if it, you know, began to bounce up in this range. So at that point, it finds resistance because sellers won't let it go higher than that. Down in this point, it won't drop lower because buyers are continuously buying it up at that point. And remember, it could dance around in this area. It could play around. It could do whatever it wants to do. But essentially, this would be the range that it would keep. That's called a rectangle bullish flag, a rectangle flag. But the one we're actually forming here right now is a pennant, which is a symmetrical triangle. So I don't know why there's one. Let me see if this why. Okay, there we go. Okay, and so now that we know what type of flag we have, a bullish pennant, we can understand that that is a continuation pattern. That means, you know, after it consolidates in this range here, we're likely to see it break out and continue. Now I'm going to show you right here, this is why you want to stay tuned to the video, how you can determine how far that breakout is to occur. So this is what we want to see. I got to show y'all the volume as well so I can paint the full picture. So that way you can understand there's exceptions and rules to this. So take a look here at the bottom. You see we got our volume. Notice where, you know, the flagpole is forming. Our volume is picking up. So I'm going to take these fractals off now because we don't need them now. We already, you know, used them to determine, you know, and that's for those who don't understand how to find the break in market structure to form that flagpole. So now that we got this up, take a look at the volume. You see how the volume is, you know, it's spiked up on our flagpole, but it's starting to taper off during the period that we have of consolidation. During that period of us forming our bullish pennant, the volume is tapering off, and that's exactly what we want to see. You know, we want to see, because what that tells us right here, so you see how the volume is tapering off. Let me show you. This is, you know, I'm doing a thorough breakdown. You know, I'm trying to do it as quick as possible, but a thorough breakdown for those that are, you know, new and those that could just use this information. So right there, you can see volume spike going up. And now we can see from this point on down, volume is essentially, you know, running down if we follow that downtrend. So volume is pulling off, which we want to see that in this area, because that tells us that, you know, the markets, the buyers and the sellers are going to war with each other, but they're becoming indecisive. In a moment, the markets are going to have to make a decision on which direction it wants to go. And when the volume tapers off in this range, that tells us, okay, we could see why it's consolidating. Usually after this period of consolidation, technical traders will use it as an entry. You know, once it starts to break out of this consolidation, they'll use that as an entry point to go long to their price target, which is generally the movement of the flagpole. So I'm gonna open this back up so y'all can see that. Okay, then, you know, this is what we usually see happen after a flagpole. Or excuse me, after a bullish flag. So you want to take the flagpole to measure it. You want to measure it from is the breakout point. So you see the support line we made to its, or from the point where it broke market structure or swing low. Measure from its swing low to that swing high point. So we're going to go from this blue line here, and we're going to just go straight up. So from the blue line straight up, we get from basically 1,100 points per coin to 4,500 points per coin. Now, I'm going to show you the cool part about this. All this is cool when you really know it. But take a look at this. So you can use the distance of the flagpole to measure where it's expected to break out at. So somewhere along this range, we can expect it to break out. You seen how it tried to right in this range here. Let me zoom in close. If it would have you know, broke out right there, we going to 7,000 points per coin, y'all. If that happens, now remember, technical traders wait for other, you know, confirmations just to be sure, you know, continuity, just to make sure things are going together, things just to make sure things align. So this is the breakout that we can expect to see. Let me pull this down so y'all can see. Remember, this is not financial advice, just sharing my knowledge that I've learned over the years with y'all. You got to still remember to do your own due diligence and never risk more than you're willing to lose. So that will put us right about 7,000 points per coin. 7,040 points per coin, give or take. Because usually what we see is this movement right here. So sometimes, you know, it can come up, test this trend line, come back off of this trend line, come back down to test this trend line one last time before it gets right here. And once it steps outside of the trend line, it's called violating the trend line. Once it violates the trend line, that pressure that was holding it back usually weakens. It's usually taking, you know, sellers out if it's going towards the upside like that. So we usually see that movement, or I'm saying we could see that movement where it could just break straight out of this area, or it could just play with us one more time inside of this range before, you know, coming out and breaking out up to that 7,000 points per coin level. Now that's a good case scenario. That's just things stay positive. That's if Coinbase, Webull, and Robinhood stop turning off the buy feature, you know, when the price does pull back. And that lets us determine how high the price can go from our breakout on a bullish pennant or a bull flag. So now you know how to do that for yourself. If you recognize this pattern on the charts, you could do the same setup. But that we're not done though just yet. So I want to show you one last thing on how you can determine where the price is likely to pull back at. So one other thing we definitely want to use is our RSI as well. We want to use our relative strength index because that tells us, are we overbought, oversold? And we know if we get this pattern setting up in oversold territory, we know with, you know, even more confidence that we're likely to go to the upside. So right now we see the RSI at a 56. So we know 35 and above, or 35 and below, is considered oversold. 70 and above is considered overbought. So we're right at that 56 range, kind of, you know, in the middle. Kind of still a little hard to determine just from that, but we can see from our chart pattern, that bullish pennant, we can see our RSI levels aren't overbought just yet, and they are actually following along a trend line as well. You can use the, you know, you can look at your RSI from a trend standpoint also. So you can see we are on an uptrend with RSI. So that's a good sign as well that, you know, it's regaining, it's refueling for that next breakout to the upside. Now remember, it can also pull back as well, but before we talk about it pulling back, I want to show y'all also how to use. So that's a bullish pendant. This video gonna be packed with a lot of gems, man. Do me a favor, hit that subscribe button, share this video. It's absolutely free. Somebody will find value out of this. So now we're gonna use something called the Fibonacci Retracement tool, which is the golden ratio. You see this pattern all throughout nature, all throughout, you know, humans, you know, everywhere we look, you can recognize this pattern in our genetic makeup. Everything you can look in flower patterns, in, you know, in trees and leaves and snowflakes and anything you can think of, this pattern pretty much exists. So let me show y'all this, y'all. Take a look at this Fibonacci sequence. It basically is the golden ratio. It's called Fib retracement, Fibonacci retracement. So what we're gonna do here is measure from that swing low area before the breakout. And we're going to bring the price up to where it's seeing resistance at. So take a look at this. So I'm gonna adjust this back where we could have had that breakout if it continued. Let's just say even if it happens at the end, we could just put it at the end. Normally, if it doesn't, you know, break out before it gets all the way to the end, it might play out all the way to the end. And once it gets to this end, it usually makes this decision. Sometimes it might try to play you out a little bit. It'll try to trade past this area a little bit longer. Like this, it'll, you know, mess around, try to bounce around in here, trade past a little bit longer when you know it already violated the trend line, it's outside of it. And then you'll see it just be like, just kidding, we going up. We usually see something like that take place too. But okay, back to the golden ratio. So now I'm gonna remove our trend lines from our bullish pennant, from our symmetrical triangle. But still remember that. So this line that we got shooting straight up, this is what that line represents. It represents the breakout from that bullish pennant. So now try to visualize it without your, you know, without your eyes, or, you know, without the lines being on the chart. And notice how even using the fib retracement, it gives the overall price key support area all the way along this area. Every time we see the price come and tap around this area, it finds support. Look, notice that right here, right here, right here, right here. So that's where we are again. We are, you know, seeing some confluence. We got the RSI lining up with us nicely. We got the volume tapering off with us nicely for our pennant. We got that consolidation inside the pennant forming a nice bullish, you know, pole. Then we got the breakout measure. Now we got our fib retracement tool telling us where is the likely pullback areas. So 50 and 61.8, or that 0.618 level on this chart, and 0.5 level are usually considered the golden ratio. Notice how in this area, or the golden zone, notice how this area is green, because it's like the best green. It's my favorite color too. But this is why, you know, because it's that golden area. So what this means is, with this pattern, it's all through nature. Usually when we see prices retrace, and it's like a spiral pattern that forms. When we see prices break out and retrace, they usually follow this pattern. It usually happens a high percentage of the time. So take a look what they predicted with the, well, what the Fibonacci tool tells us. We got the 23.6 level. We got the 38.2 level, we got the 50 level, we got the 61.8 level, and the 78.6 level, or 0.786, 0.618, 0.5, 0.382, and 0.236. But we got these levels, so we know that with this area being the golden range, that's likely where the price wants to pull back to. It's either going to want to pick, for a healthy pullback, it's going to want to pull back to that 50 level or a 60 level. So usually we don't really want to see it pull too far past that 50 level, because if it does, it could potentially put enough momentum to push it to the downside. Doesn't always mean that's going to happen, but that's why we want to be careful with that. So the lowest that we could potentially see it, that, you know, even if I think it flashed, would be around 2,300 points per coin. Do I think it's going to flash again at this point? I don't think so, but then again, it's hard to say because we got these centralized exchanges turning off the buy features on some of these exchanges. So that's how you use the Fibonacci retracement tool. Look for it to pull back to the golden ratios, the 50 level or the 61.8% level. You can enter trades at these levels if you want to, you know, get a safer entry. But that's all we got for this one, y'all. Shib going to, it tells us right here, and that's if we move it to the lowest point. Let me see. 6,500 points per coin. Shib will be between 6,500 points per coin and 7,500 points per coin. But really, I'm thinking we going to that 75 points per coin level, y'all. Shib wants to flirt with all-time high too. And then what do people say after that? After Shib hits, you know, 4075, that's right there, all-time high territory for those that said, you know, it was absolutely done with. Sheesh. But that's all we got for this video. Reach out to me. We did over 2,000% gains this week in my private Discord community. If you want access to that for a limited time, very limited time, take advantage of this offer to get access to the Discord community. It is $150 and $100 per month at this point, but that price will be going up soon. So that's all we got for this. Email me DecemberDeMarco@gmail.com if you're interested. Appreciate y'all for pulling up, and we are out.